Welcome back, welcome back. Good afternoon. Let's see. I see a lot of guessing in chat. Looks like C Trader's 390.60. 390.60. We closed at 390.73. That's pretty damn close. That's pretty damn close. A pretty good close, right? And a good example of you really didn't need to watch anything during the day. It's a break-even day, right? The one area that is important to see is just tech's ability to hold up here comparatively to value, right? Because, again, there's more to lose here. So over here, though, the same thing applies to the rest of the market, and the reason why we sort of, it's not like preaching, but it's a bit of an idea to not be too caught up in what's going on during lunch, because again, you get too caught up with this and you might get shaken a little bit. Now, of course, depending on positions, you can certainly get hurt. This is an average. Pot stocks took profit today, right? So if you held through pot stocks, that's probably where, I'm looking through the profit section, it's probably where a lot of those numbers are coming from. But also, in terms of today, you may have a down day because you're holding long positions. If you're holding a position to go into tomorrow, you might have a down day. So sometimes every now and then you're going to have a day that you're going to need to just hold through some losses to go further into the long position, which again, sometimes is not the easiest thing to do in the moment because you're like, well, I'm going to protect my position now. But to get the long-term profit that you need, not need, but that you want, you're going to need to hold through some sort of situation like this. Now, in terms of the overall trend here, did this nullify our idea of this trend up here? It did post a lower low, so that's something to keep in mind in terms of what's our consolidation. We know we need to consolidate this move. Again, this move from here to here is about 12.5%. So considering that we lost 66 basis points yesterday, 11 basis points today, we still haven't even taken 1% off the top. And I don't know if it's the value that matters so much as, again, the time. So we are consolidating with the idea of tempo. So we are taking some tempos off the table, which can be consolidation. And if you think about the movement, this is actually a pretty good way to consolidate price, which is this very quick price movement. We've talked about sort of the violent moves that the price will be making now and into the future, right? We've seen it in a lot of different areas. So I would say that this is a pretty good setup for what will be possibly a very big day tomorrow. Now we need to see that. If tomorrow continues this move here, then we're going to be pushing long positions, putting a lot of risk on the weekend in a moment where people may not be prepared to push something into the weekend due to the fact that we put so many points on, right? 8 days in a row trending up. Today is sort of the first confirmation of being a little bit lower, but you look at the rest of the market, right? And it's not really telling the same. It's telling a story that we're trending, right? Higher lows here. Tech did well. Now there wasn't that much volatility, right? Wasn't that much volatility. Stayed subdued. So tech did a little bit better because volatility popped a little bit, right? Value came up or came down, rotated into tech. I mean, in terms of the market on the average, which again is not what we're trading, but we're using it as an understanding what we're looking at, I would say it's in a pretty good spot to keep furthering our position's own velocity, which we're going to take a look at them. And obviously you see the top of the list over here. Let me position it. Most of those losses, again, coming from those big gains on pot stocks and the like. The dollar, like I've been talking about, is sort of broken down, and we don't really care too much what it's doing within this area. Possibly if it's breaking down tomorrow, that'll go further into value. But any really movement over here, we don't really find any correlation here. We haven't seen any sort of move in the macro sense. The only thing that's really affecting this is treasuries. So on the treasury side, let me bring up the markets tab. Treasury's gaining, right? Gaining on the day. So a little bit of demand going over to the treasury side since we had so much coming out over sort of the last week as it comes into the equity market. But anyways, not much going on over there. Let's bring it over to the positions here. Some pretty obvious breaks today and some continuations from your favorite alert word from the last week or so. Again, the most recent charts being really the most bullish. Everything from February are putting significant moves on. A lot of volatility, a lot of points to be had. This GNMK on the top of the list. This was a break over here, this 15.5. That was from 2 days ago, this trade. This over here is again, when we talk about transitions, you've got multiple ways you can think about this. Coming up into this trend line would really be the point. This is a great trade. Again, I've talked about healthcare really being that tier 2 sort of when we think of what are the different tiers of this year, tech, then healthcare. This is a good example of that, right? These sort of things are going to continue happening. This is not a chart that makes moves like this. Look at this price action. And then here we are. After the breakout happens, look what happens, right? So again, we look for these pretty obvious moves. This is a great trade. HYLN coming up next is, again, part of this sort of this sector that, again, we don't really have a word for, but it's continued since last year. Coming in the summer, all these car parts and, all these rental car services, it's a very strange thing. And again, it's a good proof of fundamentals do not mean much right now. These moves that happened here, that was the summer when we were trading all the car parts, all those, there's a lot of examples. And again, we tracked this breakout here. This is a good example of you get a move, it consolidated further, and then it continued until it broke the trend line once again, right? You extend the trend lines. Here you are today. It's a pretty obvious break. We mentioned this one off the bat as well. AMKR, semiconductors, again, we've talked about the different schedules that semiconductors are on. I know a lot of you are in the NVIDIA position, so if you look at that AMKR, that was 22% today. NVIDIA continues as well. We, of course, took the NVIDIA trade over here. Now, where are semiconductors going? Well, they have a ways to go. You think about the consolidation they've been in and also the charts as we see being on different schedules. There's a lot of points that can be had, and you sort of go around the market looking at some of these others that we've looked at. These have been very bullish moves, and those that have been consolidating more during these uptrends should be converging towards the upside with the others, right? With the one exception really being AMD, which because of it being really I would say the leader, right? It was the leader coming out of COVID, coming in from the summer of last year. It put the most points on. It was a retail favorite in terms of options. Maybe it's consolidating a little bit longer, but even this, we do expect to make a move. And I just want to, I haven't mentioned it in a while, but the SMH is the semiconductor ETF, right? This is really the average that you're looking at when you're comparing it. I usually go back and forth when we look at the small cap and the value idea. And we don't really bundle it with semiconductors with that space, but we have sort of done this thing where we've put solar with semiconductors, and then we compare it against that value average because it's not so much growth as in it does have value to be gained off of sort of a fundamental idea, but it's more of like a policy-driven aspect to it. And coming from an economic standpoint, and we always use that Russell 2000 chart as being the tickers that are tied to the economy a bit more. That's really what the semiconductor space is, right? It's tied to that supply dynamic, which is why that TSM chart is really done the best, because this is the largest supply semiconductor there is. There's sort of the underlying supply to just about all of these companies when you look at it. And so being on the cheaper end, this is sort of why we see this move. And again, if you relate that to the SMH chart, you can usually go back and forth and look at this. And so again, if you want to sort of minimize risk and maybe capture a convergence between all those charts, of course, you can always use an ETF, sort of like what we did with the MJ chart with the pot stocks, which, now take a look at it. But again, you should be making the correct choices. If you lost money on this chart, then you're doing something wrong, right? You're really doing something wrong if you lose money on this chart. I do want to mention it because it did take a big loss today. It was up 75% since we entered it at support. If somehow you lose money on this trade again, right, there's something really going wrong. There's something really going wrong. If you take a look at this intraday chart, I'm going to show you. This is where, if you're looking at charts on intraday, there should be no question. There should be at no point any sort of question about what you should be doing in this trade, right? So I just want to mention it because it should be obvious. We enter on support, and again, the candles are a little bit smaller, but these are big candles and big moves. Come into the trend line, you should already be getting ready for transitions up here, because again, that's about 50%. This gap here, you should certainly understand based off of what we know that coming in above supply of the trend line, you should be doing some sort of transition. Over here is when I talked about we were buying that new transition point. This move, right? You're gapping down. You're gapping down from the start about 4%. Whether you hold this and you're waiting for the trend line or not, there should definitely be a take profit point coming. And no matter how you use that, whether it's from the opening gap down or from the trend line break, if you re-entered over here somewhere, even if you waited until the trend line, you should be getting well over break even on this trade. So you should not be losing on this trade. So when you go back and critique yourself on this chart, for instance, you should see that however you decided to do this, whether you were sort of lax on the rules or you were very strict on yourself, there would be no point when you're losing up here based off of the way we use our rules, which is, again, if you stay disciplined on this chart, you should be getting them really maximizing the profit out of this chart, especially now when you look at it in hindsight. Doesn't it feel great that we transitioned on this trade and then you get the chance to then get the next move? It didn't happen, but you protected the downside, didn't blow up this position that you got a lot of gains on, and now you can look at it in a different sense because you're not in a position, you're not hurt by it, and you don't feel guilty about this candle, and you're actually ready to make the next trade, which, again, has anything changed with pot stocks? Are these going to go? Is this going anywhere? Is this not going to return? Right? Did something change policy-wise? No. It's just making a technical move based on the amount that it's gained, right? And so whether it takes 2 weeks to consolidate, 2 days to consolidate, we're not going to change our mindset just because of the way that we saw this take profit. Because again, nothing has actually changed on that chart. So keep that in mind, because if you take a look at some of these losses over here, there might be a few other positions that we can use as a good example. Maybe the Codex chart as well. We talked about the break from buying support here up to the next day. These moves are very obvious. So again, there shouldn't be, I would say on most of the charts that we've looked at, if you've made any of these trades, let me see if there's an example of one. It's really not. Maybe Tiva you could get caught off guard. But again, even these moves, there should be at no point where you don't have an obvious sell point. So I just want to make sure that when if people are taking down days, it's because you're pushing a long position. It should never be you're holding through a downside move. So again, if you're in an options position and your position's not moving to the upside and you're not holding because of a long oriented strategy, but again, if your options position goes red, if you buy an option and then 2 days later you actually have lost money on it, you should not be in that position. It should be that let's say you gain 5% the first day and the next day you lose 2%, you're still in the profit there, so you hold that position. If you're losing at any point, you should be stopped out because your stops should be at the exact point at which you entered. If you bought a contract for $5, your stop is at $5, right? There should never be any difference there. So I want to make sure that's happening, and that when we look at the profit section and we see if people have lost days and then we see the next day they have like a 30% gain, you can see that minus day was just off of the top of their profit. That's not actually going into the downside. So if you see some of these people here that consistently have big gains, remember that that's off the top of their profit. That's not from their downside. They're not paying for that. They're paying that out of the profit that they have. So remember that, and if you do have positions that are actually getting hit on the downside, then you're doing something wrong, because you do not sit in an option position if it's losing. We always talk about it. Exit the position and buy at a lower price. There's no point not to, right? We talk about that a lot. So for instance, if you made day trades today, if you made a day trade today and you bought over here and then you held through, let's say, okay, here's a good example. You bought at 390.45 right here, 390.45, and you held all the way through here, and then it closed at 390.73, and you're like, wow, look, I'm up like 30 cents here. See, I'm up 30 cents here. Well, why didn't you just sell it and then buy it back down here? Buy it over here. you can always just re-enter the position, right, at a lower price, a better average. So remember those type of ideas, because again, you should never be holding options down to the downside, and especially if they're out of the money or short terms, right? There's certainly a point there in terms of what contracts you have. So keep that in mind, for especially for days like today. I mean, again, you look at some of the moves here when we talk about something like travel here, right? We're expecting a big move coming probably next week again on these charts, right? But you don't want to be, for instance, let's say you finally just bought over here. You're not going to be holding to the downside when you have an obvious support you could be buying on, and also your timing is not there anyway. There shouldn't be. This is a good idea, but this is a good example of a position. No one should be sitting in this position, just doing nothing, right? Maybe if you bought over here, fine, that's fine. You want to just you feel confident in the position, that's fine. But as long as you're above where you had entered, that's the only time when it's okay to be losing on a day like today. Otherwise, it doesn't really make sense. You can re-enter, right? The only thing you'd be risking is a gap up. I don't think anyone is worried about a gap up happening and missing those points tomorrow, right? I don't think anyone that was trading today said, "Oh man, if I'm not entered and I'm not in and I don't hold this position that I'm taking water on, I may miss a gap up." That's the same as Perma Bear saying, "Well, I don't want to miss the downside, so I'm just going to short every single day," right? We don't do that. We push our winning positions. If you're 20% up and you lost 5%, you're going to keep pushing that position. You're willing to take some off the top, right? You're willing to take some off the top for that continued gain, right? It's for that chance to continue pushing position, because you never had a relative reversal, right? There's a few good examples. Something like this, maybe let's say you bought them. This is from that other Friday. You bought down here, right? And then this happened here. You're willing to hold through this because let's say you're up 20% on your contracts here. Let's say you lose 5%, another 5%. You're willing to stay in that because your average is so much better down here that you're waiting for a relative reversal to get out. And so since you pushed it, you got a significantly higher return than exiting over here, rebuying, and then pushing it, right? That's where transitioning isn't good, and you need to be pushing, not diamond hands memes, but for technical reasons. Since your average was so much better here, you know when you got a good deal on contracts, right? You paid $2 for a contract, and now it's worth like $7 over here. You don't want to be taking profit there and then buying back at $6 when your average was $2, right? You know when that's the time, and so you got to keep that in mind when you have a day it's sort of exactly like this situation. If you entered a long position over here on IWM on the Russell 2000, you didn't take profit on these 2 days, right? You're not going to say, "Oh, I'll take profit here just to re-enter over here." No, your average just got absolutely blown up then. If you entered anywhere from down here, right? Again, this was like 12.5% from the low to the high. Then you would not be taking profit on this move, of course, right? Of course not, right? And so let's say someone in chat, let's say like somebody in chat posted in the profit section that one day they're up 30% and then the next day they're down 5%. You can usually see that that's where it's from. And then let's say tomorrow or next week this is up here. You can see the difference between rebuying here or if you're from here, right? If you just kept pushing it. So it depends again, but I just want to keep that in mind because, again, it's always a little strange when you have such large weeks that then have a stop day, but that's how price works, right? We always have a consolidation, right? I would say, looking at this chart here, you're going to have a big decision tomorrow in terms of price movement. I think today it did post a lower low on this chart, so I'd be a little bit worried about value average tomorrow. I think there are sectors within this space that are doing very well. Intermediate tech, semiconductors, REITs, right? REITs, banks, those are doing extremely well, right? When we talk about value, look how well these charts are doing. The market's not turning bearish. The market's not turning bearish if the slowest moving sector in the market is moving to the upside. Just like we talked about energy. Energy itself, the only reason why this moved today is because the spot crude was down, right? It's reacting to spot crude, and we talked about that. This move here, the market is, of course, not signaling a downturn until it signals a downturn. You'll see it. This chart has not lost even 1% yet. Oops. This chart has not lost even 1% yet. It's not enough for us to say that that's it, especially when you look at something like tech that's been lagging and it's doing all-time high push still, right? So we're not gonna change the bias until that changes. Going back to other tickers, Zillow, obviously off of earnings, but it doesn't matter. Is it earnings that caused this chart to move, or do you think it was the fact that this thing's been trending for 7 months, right? The one earnings, no, that had nothing to do with it. This chart was trending, and I talked about this morning. I'm not going to beat the dead horse here, but again, this type of trade, you've got to stick with the not what you think in your story about why earnings might be good or bad. In the headlines that you put together and create a story, that's not trading, right? There's nothing that you can do there to change what the market's going to do. So Sono, same situation. I mean, they're the same chart. It's basically the same chart. Keep these in mind in terms of earnings as we're coming towards the tail end of earnings now. Once earnings is behind us, we go back to trading the same way. No, we didn't go back. We never stopped trading the way we trade. You don't change up your method and your strategy because of some earnings season. All you do is you elevate your risk and understand there might be some extra volatility. There might be situations where gaps occur because of this. How do we know where the gap's going to happen? Oh, what if I told you that there's these lines you could draw on your chart and you could actually know how it's going to move, right? Do you remember that Netflix one? Netflix opened earnings this earnings season, right? Holy crap, who could have thought that price would have opened if it's going to gap, that it would gap right under the trend line that we've had for months, right? Remember, this is all based on the technical because all we're doing in terms of our method and strategy of trading is we're just trading off of supply and demand, and we're just charting those levels through trend lines, which is an idea of velocity, which is, again, all of these levels being some sort of psychological understanding of price convergence. A trend is just the velocity, which everyone believes price should be trading a certain speed over a certain distance. And this idea, again, of tempo, everyone has an idea of how much time it should take for something to move. If there's a good earnings, price is going to gap to where that trend is believed price should be moving on, right? If price is good in this fundamental idea from these people, it's not so much that it's that fundamental idea that all of a sudden is making the chart valued at, let's say this is like 566, 565. It's not the fundamental value that's putting it here. It's the supply value, which we've already tracked that put it here. There's no such thing as coincidences where every single time the price is bouncing on supports, bouncing on resistance, it just happened to gap up into the supply, right? Those are not coincidences when every time it's the same, right? So once we get out of earnings, we don't go, okay, let's go back to trend trading. Let's go back to using our support buys, right? No, we've been doing the same thing the whole time, right? And we use it every single time, and it doesn't always work, but it always protects us, right? It always protects our position, which is, again, when we looked at some of those losing charts, there should be at no point, if you're following the rules, that you get hurt on those. Sometimes you just don't gain as much, right? Because you're protecting your downside a little bit too much at times, which I've never heard anyone complain that, you know what, I really wish I risked blowing up my account there for those extra few dollars that I could have made if I was able to buy yesterday, right? No one says, well, you know, it's a shame that I didn't make that 10%. It's a shame that I didn't make that. No, I don't think so. That would be ridiculous, right? I don't think you ever put your risk reward with a risk of blowing up positions for a smaller reward than you would have got from what our method gives anyways, right? That's just ridiculous, which is, again, why we avoid hype trades, right? We don't count on someone else doing something. It's up to us. We're in control. If we're not in control and we have to rely on other traders to make our trade for us, if we have to rely on someone else buying for us to be okay, then we're no longer in control, and we're just sacks of meat anyway, right? A bunch of meat bags over here. Let's not make it even worse than that, right? Let's not make it worse. In terms of further positions over here, again, a lot of these are healthcare bios that we've been hot on. A lot of these are REITs. In terms of entries and everything today, I always talk about this CSPR trade is obviously very nice from yesterday. We do talk about on days that the market, so today and yesterday, being a bit flat and even, that you actually get a lot of great opportunities on our style of trading. And so what I would do is, for those of you that do have the list, I'll repost in a notepad. I would go through the top of the list here and see what happened and why you missed some of these trades. Some of these are, again, opportunities where you understand the market's trading flat, and you have chances that it's going to be even more obvious because you don't need to rely on market demand or market movements pushing price, and you don't know if it's the chart itself that's causing it to move. On a day like today, you know that any moves is because of the chart itself. There is no doubt in terms of the velocity. It is the chart moving. So anything that beat the average had to move on its own demand, right? And again, the charts that we just recently posted really doing the best. I just want to show the RPI, the RPAI, and the GPRE chart. These two I talked about from pre-market, the ones I posted last night. These are just good-looking charts. They're just good-looking charts, and I know that usually let's say I post 10 charts. There's a few charts that everyone likes the most, and usually that's a sign that other people are obviously going to look at the chart and understand that this is bullish. This is a good example. When I post these bottom wedges like this, it's not just that, we've got the pattern on there and we see it. No, the whole market sees it, and they're able to trade it accordingly, and they're willing to go buy up here. When at some points we talk about, sometimes you're like, well, that can't go any further, man. What are you talking about? No way that goes higher. Here's a good example of a trade that no one said this can't go higher. There's no way that goes higher, right? Look at the way the supply worked in here, right? It's now coming up into this new area, and you can see some of the spikes that are possible coming out of here. Look at this price movement. Does this not look like where we are right now? We just went through this whole level, captured this whole move. Look at the possibilities in terms of the way it's been traded before. So what I would do is take a look through some of the list and see some of the velocity that was created on some of these trades. Because again, I think there's probably some trades in here that you'll find that you looked at and then you missed something like open from yesterday. Coming up into here, we knew price was going to trade up to the top of the channel in this chart. It's a brand new chart, so we don't really know what happened thereafter. Charts like this, brand new chart, I would figure it out. Run. We knew that solar was going to do a bit better today, right? We talked about it in pre-market. We know going into the weekend that this is going to be one of the better trades, so you want to put a long position on. These kind of ideas, figure out why it's not obvious to you and make it obvious. Convince yourself on some of these trades by just seeing the candles in the price action, right? Again, don't use some headlines or story. Let price tell you why it's obvious. Why is it on the PayPal chart and the squaring chart that this move is obvious, right? And then we see that the trend line broke down and didn't hold, so you know to take profit up there. How do you convince yourself that you need to be taking profit on this move and transitioning this trade, right? We talk about these ideas, but you need to be able to convince yourself that this is how you need to be. As soon as it happens, you need to be reacting, right? So you got to find a way to increase maybe that bit of sensitivity in terms of pulling the trigger, not only on entries but on exits, but also having an understanding of where price is going to be in the future. Do you think this chart by, let's say, the end of next week is going to be higher or lower from here? It may consolidate at some point based on this move, but is it going to be higher or lower? And that's where you start to think, okay, maybe if I transition, how should I be entering it? Am I willing to maybe have a take profit day for a day or two coming out of my profit to then push it further? These type of ideas based on where you entered. If you had only just entered here, you're willing to push this position further. That's why I always talk about, if I don't have 100% gain on my options, I'll just stick in the position and get stopped out. If I entered over here, you certainly didn't get 100% on that trade yet. Then you'll get stopped out at your break even. Maybe, sometimes that might be what it takes to get some of those positions to get pushed the way they need to be, because there's a lot of trades that when you look at it, you're going to miss if you're not being a little extreme in terms of rules, right? The 100% thing is a little extreme, and I certainly wouldn't recommend doing that. And obviously, I don't always hold that. Sometimes you gotta break your rule a little bit in terms of, okay, I'm at 98%, fine, I'll take profit on it because it's obviously breaking down here, right? If one of my other rules come into play, then of course I'm gonna use that as a discretionary sort of rule, right? But sometimes you might need to give yourself a little bit more room, because if you're taking a trade in what you think is supposed to happen doesn't happen, you shouldn't be in it, right? You just shouldn't be in it, because that means you just made a trade and you don't know what you're doing. You just made a trade and you don't know why, right? And something that you thought was going to happen didn't happen. That's like when I draw a pattern and nothing happens, then it's not that the pattern's gone, it's that I don't actually understand what's going on. There's no clarity, and if there's no clarity, I'm not trading, right? So keep maybe those ideas in mind. I do want to mention the X chart here. So we've been talking about X, one of the most bullish charts that we've had. We understand that there's not only this idea of stimulus and the economy coming back, but government spending in terms of infrastructure and everything. So we know there's some sectors that are going to be very, getting a lot of benefit from that spending. X is one of those charts. Did anything change during this time? Nope, nothing changed. It's consolidating these moves. When we had this flag here, it even took a little bit longer for it to break out. It did make the move. We understand there's a bit of a lag here just due to demand going elsewhere. Getting ready for this move. Tomorrow, I talked about it, is the day that you have a lot of converging over here. It's also Friday. You get a little extra volume, a little extra demand. People do like to buy risk into a weekend because of the chances that the market is the meme, stonks only go up, right? This is a good chance tomorrow. I take a look at this. I am in this position. I'm at break even. I wasn't going to get stopped out of it today, even if I lost 1% or 2%, just because there is a high chance you open above this level. This comes in at about 1690 or so over here. This is the kind of chart that it is, when it makes a move, it's going to be obvious. And so, again, it's these kind of charts that you want to make sure you're trading correctly, because these are the ones that offer clarity as soon as a break starts, right? If this is going to break out, you're not going to miss it. It's going to be like the sun shining in your eyes. You're going to know, right? So keep in mind these type of positions, that these are not difficult trades. You don't need to be sitting in this position. I'm just sitting in it because, again, I have a little bit of confidence in terms of a gap up here, but you can certainly wait and miss the points. Sometimes it's worth it to get in preemptively, even though a lot of times I say just wait for the break, miss the few points. In this type of situation, I'm a little bit more leaning towards the gap situation, and in believing that I don't want to miss it. I also have traded these contracts enough to know that if I want to get ample sizing for myself, I'm not going to be able to get it at an open. You might be fine picking up a few contracts here. I'm not going to be fine trying to buy out a strike price, right? Just not going to happen. So that's a bit of a sizing thing, not so much a chart or anything strategy-oriented situation. So those of you whales out there as well, you know better that you have to be a little bit more perfect, right? If you're trying to buy more than the next guy, you're going to have to be a little bit quicker. You have to pull the trigger a little bit faster, and it's going to take a little bit more risk on half of those contracts to get into position. Same with taking profit, right? So that's a little bit of a different discussion, but keep those ideas in mind, of course. EVs, really big day coming tomorrow. We talked about Tesla breaking down yesterday. Today, you got a bit of a historical retracement, but guess what? You didn't get it in terms of the close. In terms of a historical retracement on a sell day, which I would call yesterday a sell day, you would be closing about halfway up the candle, which would be about 2.5%, like I said. Now, you made the bid up there, but you basically continued this downtrend. And I talked about this, that based off of this, it's more likely that you come down here on this chart just due to the breakdown of the consolidation and how much supply is up here. It's going to be important that you don't get a lower low tomorrow and that you see some risk get involved and pushed in here. This is tightening. You got a doji on the day. A doji usually signals a reversal of the trend. You could call this a downtrend here, right? You're going to need to see these to move to have EVs up next week, right? This is not price just trading for today. People aren't just buying and selling here because of today as if it's its own candle. Of course, you're buying for a later price. Tomorrow is going to decide these positions. If you're in NEO, for instance, like a lot of us are in the NEO position, just the fact that China's bullish is not going to carry this position. If this, you can give it a chance. Here's a good example of if you entered over here with the trade that a lot of us made here, you're still in this position, right? You're doing okay. You're doing okay here. You're still up quite a bit. You lost 2 days. You lost some time, but you certainly still have an implied move that's to the upside. But If tomorrow you're selling again, you're not staying in that position, but you're willing to take these points off your profit for the chance that it is going to go, because you don't want to take profit over here and have to buy in at over 7% average higher, right? This on the contracts is like, what, 50% higher? So do you really want to pay 50% more for the position when you can just push it and make a decision tomorrow? Absolutely not. But EVs are going to make a decision tomorrow. Absolutely. I would say it's going to the upside. But based on this, it doesn't need to, right? We're not doing off an opinion. We're going to react. If from the open it starts selling, you're exiting these positions. I think there's a few, in terms of possible other trades, it's possible you're still pushing a long position from over here, from WKHS, but this is a significant move, and I find it very unlikely that anybody held through any of this. Even this candle, I'm very doubtful that anyone here would hold through that. You traded about 72% higher from here, and this loss, there's no way you held through a 27% loss. There's nobody here that holds like that. I don't hold through it like that. So I would be buying back in over here. So I'm very doubtful that anyone's in any other EVs that could be getting blown up or anything like that. No one's been in this trade. Possible that if you get an EV move tomorrow, that something like this breaks to its trend line. Like, this is just waiting for Tesla. These are just waiting. And then the other two, of course, being Ford and GM. This needs to decide, right? This broke through support. You're giving it a chance if you're over here. I'm in this position. You're talking about, you're right there. You're on the cusp. You got to make a move tomorrow. So this is going to be our focus tomorrow, because if you don't, you're going to be entering a consolidation. We talked about price did not consolidate this move, didn't consolidate this rally through this sort of V pivoting move, and it hasn't consolidated it enough up here. Tomorrow, you need to know if you're going to continue the rally or if you're going to consolidate longer, which we've already seen Tesla's been doing, right? This move here, is this the double top, or is it just a move to keep going forward, right? You need more. Obviously, GM we've already talked about the differences here, right? The difference of holding up at this level and pulling back. Nobody should be sitting in this position. This candle here, we always talk about selling on a candle like that. This is a bit of a reversal candle here, right? So it's possible we do get the move tomorrow, but this position should not be held at any point. I don't see why anyone would still be in it. Even if you enter down here, you are already at your relative reversal point, right? But EVs will be a focal point tomorrow. So come pre-market, we're going to look at those numbers. We're going to be very sort of locked in on what happens over here. I think the Hang Seng is going to probably give you everything you need to know about the EV side of things in tech, because this, again, is sort of what leads us into pre-market tech, which would be everything NASDAQ-oriented. This has been doing extremely well, and I know you can certainly see the resemblance to the charts that we just looked at with this move, because this is basically that sector and the tech sort of bundled with it, right? And so if this is going to continue, that might be all you need for those to continue, right? So you're going to have a lot of ideas. I would say that I wouldn't plan anything too crazy yet. Just have an idea of what you're going to do with your positions. And if you can't get into EVs but the rest of the market's going, then you're not going to be sitting there sulking that you had to exit a position when you have chances elsewhere, right? There's going to be opportunities tomorrow. Whether it's travel tomorrow coming out of this move. Again, a lot of strange things can happen on a Friday coming out of a move like this, that you've got that bear flag idea, a bull flag idea. Like, I know you guys see these kind of things every single time it happens because it's just the most obvious out there. These kind of moves could certainly lead to significant upside. This win chart really being the win-win, right? This is right there then, and this is the chart that would be decided on a Friday, right? Here's the Friday candle from last week, right? This is a decision maker tomorrow, because if you don't, then you're just going to pop out the sideways and you don't care anymore. You just don't care. These are charts I want to put risk on if it's there. Same with airlines again. So EVs, if it's there tomorrow. Travel as a whole, I've talked about the intermediary travels like Expedia, the TCOM chart. These These charts are honestly great charts. If you're missing these kind of charts, again, figure out what is going on in terms of what you're looking at. Again, this is the kind of chart that this is what our strategy works on, right? Fundamental traders are like, oh, travel is really never gonna, it's not doing well because COVID and all these things. You remember what happened? It was like 2 months after COVID started. Travel charts were exploding. Obviously, they came back down, but to act like any of this price is fundamental is crazy. These are purely technical moves, and it's important to be able to capture those, right? So I want you to take a look at some of these charts. Take a look at travel, semiconductors, EVs in terms of if you're in position or if there's going to be a move tomorrow, and then take a look at why you missed REITs, the bank move, right? REITs especially, because those are really slow moving charts that are really silly to look at and be like, how did I even miss that? Because it barely moves to begin with. Those are important ones. And then in terms of what you're focusing on for new entries, if you did take cash, are the brand new charts that I basically just posted, right? All of those charts from at least this month of February, I'd be taking a look through those charts. So just go into the Discord, go into the Google Sheet, look at those charts and see which of them are coming into some sort of support, break into a resistance. So sort of the charts I posted yesterday, you know why these charts didn't make a move or not. This chart's tied into the spot crude. FRO over here, what happened here? Well, we're trading in between levels. We understand where the levels are. You see where the price is. Be ready for a move above resistance there. SWCH, you know where the levels are. You've got these trend lines. You know where it would be that you're buying. You know where you're a buyer on the upside. Just find out where these are so that when the day comes and you're looking at these charts, for instance, something along these lines, if the move's continuing. I talked about the DFEN chart. This is so close to making a move here. You don't want to miss a move like this that's so obvious. It doesn't need to make the move, but if it does make the move, you're going to be kicking yourself saying, that was the easiest thing in the world to see because it's got this major level of resistance and it's got this entire move to make with no supply above it, right? It's like 280%, like I said. It's a ton of points up there. There's just some things that look at these recent charts, find out like for the run chart here, like solar, nothing's changed on solar. This consolidation, it's just technical consolidating. As soon as it breaks out, it's going to continue the move, right? This trend's continuing over here. It's the same trend. Figure out what you got to do to get in position for some of those. A chart like this, 916 breaks, you can enter it, right? You don't even care what the company is or anything, right? So as you go through these charts, figure out what it is. Retail stores, right? We've been so hot on retail stores. We bought on fear again yesterday, right? GPS, these charts, everyone else sees these charts. Everyone sees these. Don't be the one that didn't, you saw it and then you didn't do anything, right? Don't be a price watcher. Keep all of it fresh. Keep it in mind. Tomorrow is going to be a fun day. It's going to be a fun day. It's Friday. We're at a bit of a decision-making point whether we're going to continue with consolidation. If it's going to continue consolidating, it's going to be a lot of points. If it's going to the upside, it's going to be a significant amount of points to get back into the trend. You have some EVs that have a lot of points to make. So, be ready. Be ready tomorrow. Here's a good example, right? Price didn't hold the trend. If price comes back, we talk about when price breaks down from a pattern, it's either bullish or bearish. Charts like this that offer significant volatility are charts that where the level is and you're willing to make trades either way, right? Either way, there's a lot of good charts, guys. I will be posting more tonight, of course. Maybe I'll post some bearish charts. Maybe there's some short opportunities going over the weekend as well. There's some areas that might be making pretty obvious consolidations. So look for those. Look for short-term patterns. I will see you in the morning. Have a good night, good morning, evening, wherever you are. And until then, have a good one.